as Jay mentioned, I am one of the founders of Tectonic Metals. We do have a few other co-founders, and I'll speak to our team in a moment. But as you can see here on this slide, there's two themes that I'm going to speaking today. So everything I speak about is going to relate back to two things. A, the shift in the game, and B, big deposits leave big footprints. So what is the shift in the game? So after we came off of our Kaminak Gold Corporation win, that was a $520 million sale in 2016 to a company called Goldcorp. You may have heard of it. That was a 5 million ounce gold deposit that was heap leachable. We asked ourselves, what do we want to do next? So some of the key executives banded together and said, is there a better way to explore? Is there a better way to run business? And that's what the shift in the game embodies, is basically acknowledging that we don't have all the answers, but it starts with asking the questions. And by asking those questions, I think we've done a few innovative things that may change the landscape on how other companies operate going forward. Big deposits leave big footprints. What's that all about? Well, if you want to hide 500,000 ounces, Mother Nature's pretty good at it. But how do you hide 40 million ounces or 45 million ounces? Big deposits leave big footprints. So trying to identify that on year one, what gives me the ability versus some of my fellow peers to identify that? It's like asking the question, how do you identify Michael Jordan at the age of 5 or Wayne Gretzky at the age of 10? There's certain things that you look for, and I'm going to speak to those attributes. I want to make one thing clear. Finding gold is important, but what's the point of finding 5 million ounces if it's uneconomic? So economics is key. Our projects are early stage, they're at the discovery stage, and we look at these projects at the point of acquisition by asking the question, can this become a mine? And if it can, or we see that potential, what are the risks that we have to tackle? Not just the upside. There's a lot of upside talk in this industry, but we need to recognize that 99% of projects don't become mines. It doesn't mean you can't make money along the way, but if the statistics are working against you, it behooves us to tackle the risk as quickly as possible and address those big questions. I'm baffled by the amount of companies that put out mineral resource estimates without any metallurgy to support that. To me, that's a red flag. Draw your attention to our forward-looking disclaimer. This came out of Bre-X, the biggest scandal, probably definitely in the junior mining space or in the mining space, and I definitely encourage you to take the time to read it. It's located on a website before making any sort of an investment decision in any company. So I mentioned the team. I mentioned how we do things possibly differently. So one of those things that we do differently is we predominantly work on native-owned land. So we're focused in Alaska, and there's about 13 native corporations. They actually own their land. And by working directly on their land, we believe it's a much more streamlined approach to advance a project. You get alignment on day one, and this process has actually inspired one native corporation, after doing 5 mineral lease agreements with them, to actually become a shareholder in our company. They made an investment in 2020, they made another investment in 2021, and again in 2022. You can look them up, they're called Doyon Limited. So there's no greater endorsement that speaks to ESG than actually having a native corporation say, hey, here's our capital, go work our land. So that's important. The other thing to note is that our projects have production agreements. These aren't just production agreements, they actually mimic what an IBA, which is an impact benefits agreement or a socioeconomic agreement, which is typically orchestrated in Canada at the feasibility stage. We've taken that agreement and we've plopped it into day one. So this agreement has mandated contractual legally binding provisions where I have to communicate, I have to donate, I have to do environmental audits. This is all important. Again, if you're looking at a project from a mining perspective, tackle those biggest risk items as quickly as possible. Our Flat Gold project is our primary project, which Jay referred to as possibly the next Snowline. When I acquired this asset, Snowline wasn't even in my radar. I acquired this project because it was in the same mineral belt as the Donlin gold deposit, and I believe I have a slide here that reference our location. So Donlin, the Northern Miner actually published a great article a few days ago. It's the 10 largest gold deposits in the world. Donlin's number 5 at 45 million ounces. Between last year and this year, Barrick and NovaGold have spent $94 million. What's surprising is that there's no other company other than us and Barrick and Nova Gold in this mineral belt. And if you think, if there was a 45 million ounce gold deposit, I bet you some major mining companies don't even know about this belt. So speaking to scale, you have to be in the right jurisdiction, the right belt of rocks that has the ability to produce a behemoth of a project. We will benefit if Donlin moves forward. It has all of its permits except for one. We will benefit from their infrastructure and that moving into production. But we view Flat, and this is key, as a standalone operation. Donlin for us is icing on the cake. I'll speak to the infrastructure at Flat in a moment, but I've just realized I passed some of the team members here. What I will say about our team, everyone says they got the best team out there. It's like talking about your kids. We all love our kids, so we always say positive things, generally speaking, that is. When it comes to our team, I didn't pick my 4 best friends to be on my board. I didn't pick just geologists. We looked, Ira and myself, looked at what makes a great business, what makes a great team. Our chair is an environmental biologist that's worked for First Nations, the federal government of Canada, major mining companies, junior mining companies. She's been involved in the permitting of 9 mines. We have legal experience. Joe Perkins announced his retirement. He's the most respected, well-known resource lawyer in the entire state of Alaska. This is his first directorship. We brought on Mick, that was formerly with Agnico, and so on and so forth. So I'm going to bypass some of the team here and let you peruse that at your leisure. The benefit of these conferences is that you can actually interact with the CEO or some of the team members that are here with me today. Going back to the infrastructure at Flat, this is a huge potentially deal breaker for economics. So what does our project offer? Well, we have a 4,100-foot airstrip that can accommodate a Herc. A Hercules plane is the largest payload plane, 48,000 pounds. You can drive a couple F-150s in the back of that. We have roads that the placer miners built that go directly from the airstrip to the mineralized zones. We have commercial barging nearby, and we also have plateau. This is a plateau. It's not mountainous by any stretch. And for those of you that are familiar with the Coffee Gold project that we sold to Gold Corp, that was a barge on-site road air-supported system. Moving forward to the deposit analog. Jay mentioned Snowline. That's the latest sort of discovery in the Titina Gold Belt that embodies this deposit style. 10 drill holes into Snowline, never drilled before, catapulted that stock to 400 million. That tells us that people are paying attention to discovery and also to this type of gold system. But the granddaddy or the godfather of this gold system is the Fort Knox mine. That's owned and operated by Kinross. It's produced to date roughly 8 million ounces of gold via open pit. It is located next to a road, but what you can see here is that the current reserves are 0.3 grams per ton. They're taking the ore, it's run of mine, putting it on a pad, a heap leach pad, and making money processing 0.3 grams per ton. That's important because we're viewing Flat as an open pit heap leach opportunity. Your average open pit gold mine right now, the average grade is 1.1 grams per ton. Your average heap leach open pit mine, 0.65. Lower grade material can be processed economically and favorably. Again, going back to the Coffee Gold project, that was open pit heap leach. And major mining companies are looking for these types of deposits and this type of metallurgical processing because it has a lower environmental impact, it has a lower capex, lower opex, lower all-in sustaining costs, which again yields higher margin. Grade is important, but margin trumps grade. Okay, going on to the mineralizing footprint. So we're looking right at Chicken Mountain. You'll see here, this is a 4-kilometer long golden soil anomaly. Golden soils work to delineate bedrock mineralization. It's an unglaciated terrain. 55 drill holes into this anomaly. Every drill hole that was drilled historically, those 55, not one duster. Everything's hit gold. 25 out of the 55 ended in mineralization. You can see some of the intercepts, 12.5 grams over 24, 27 grams over a meter, 0.98 over 76. Anyone can make 10 grams per ton work. How do you make 0.8, 0.9, 0.7, 0.5 grams per ton work? That's important because every gold system has low-grade material. The way you make that work, again, open pit heap leach, you're now looking at a kilometer of the 4K golden soil anomaly, and it doesn't take too much imagination to see that that middle spot that hasn't been drilled, we have 2 trenches that support 6.6 grams over 27 meters, 1.17 grams over 64. So it does support that can be mineralized. Again, only drilled down to 100 meters vertical. And another view of that slide, from one drill hole to the other, you're looking at all 55 holes now in one slide. Most of the holes start in mineralization, and 25 of them end in mineralization. The average drill depth is 96 meters, completely open in every which direction. And if you want to know what does 8 million ounces look like geometrically, we have the Fort Knox mine here. That's the mineralizing footprint of that mine. How do you hide 8 million ounces? Well, you got 2 Ks over down to 500 meters. And if you look at our golden soil anomaly on the left there, you can see that probably 20% of it's been drill tested. And the soils work as far as delineating mineralization, because we have 55 drill holes to support that. And then you can see the longitudinal section could support 2 Fort Knoxes in there. I wanted to touch upon metallurgy real quickly here. And, oh, sorry, this is a different presentation. Okay, well, we'll say about the metallurgical results that we did 4 different types of tests. The first one was your conventional bottle roll, average recovery rate 97.5%. We then did a coarser crush. This is a 6-mesh bottle roll that can be used as a proxy for heap leaching, and we obtained 88% recovery. And then we did another conventional gravity plus bottle roll, and that returned 98% gold recovery. The game plan this year is to go drill test this, test the breadth of the system. We're looking to do spend about $5 million this year. And the question I've challenged my team, can $5 million give indications that this is a 5 million ounce plus gold system? It's a big task at hand. We're up for the challenge. That's us in October, and I'll leave it at that. Thank you.